Go to the heart of the matter, which is you absolutely nailed, frankly, like no one else, the call this year. I put you and Ben Laidler together with just simply getting it right. And part of that was don't sell tech, have patience. The gigatechs continue to go up. Ives over at Wedbush guys, Apple 185 today. I don't want you to do an individual stock, but update us on the gigatechs and their support here into 2022 and 2023.
Well, it's interesting, Tom, that if you separate out the story between kind of fundamentals and the backdrop, the fundamentals are much stronger for the cyclical part of the economy. However, when interest rates fall, and so when interest rates fell from 175 or 178 back down to where we are right now, it helped tech and growth companies. And so you have this really strange situation where the fundamentals are screaming to buy cyclicals. The cyclicals are cheap, and yet the tech companies are doing well, mostly because the backdrop is more supportive.
So, John, I want to sleep well at night. What's the suggestion here? Just buy the index and ignore everything else?
No, take me to the U.S. Open. That's how you sleep.
We'll get to that later, Tom.
Okay, sorry.
We'll deal with that later.
He really has an issue.
John, go on.
Yeah, no. I mean, the story is that the disruption that we're seeing in the economy is going to last much, much longer than we all think. And when people are asking about whether inflation is transitory, it's the wrong question. Is the disruption from the pandemic and the reopening process transitory? And the answer is yes, as long as you think transitory is 1 or 2 years. And if that happens, as much as it may be vexing for the Fed, it's really good for corporate profits because companies have figured out how to manage this and turn it into better profits. And better profits are what's driving the market, not sentiment, not easy money. It's this incredible profit growth.
Okay, John. So to quote Kit Jukes over at SocGen, how long can this Goldilocksian environment persist for equities?
Well, first of all, I don't think that I would describe this as Goldilocksian. I mean, the whole economy is broken. I mean, we can't find the labor we want, and there's disruption, and you can't order the car that
but stocks are up. That's what he meant.
But stocks being up and Goldilocks are not the same thing. But how long do stocks stay up? If the Fed doesn't do something dumb, I don't see, which they're not going to. I mean, they just won't. This thing is going to continue longer than we think, and the disruption that we see in the labor market that you talked about is not going to disrupt the stock market. So I think the next year is going to be another very strong one. When we put out that 5,000 number, Tom, and it seems so aggressive, now with how much the market's moved since August, it perhaps doesn't seem strong enough, given how.
You want to come on? You want to make some news here? Let's go. We had we had 5,050. Come on. Let's go. 5,100.
You did this to yourself, John.
How Pollyanna we were about things a month ago when we put out this number, and today everyone is nodding that this seems, quite doable.